Hello everyone, friend Mozart here. This is a Bitcoin review. It's been a while since I last did a review. There were a few reasons for that, but overall, it was really just Bitcoin that was moving. For the most part, altcoins bounced back a bit, but they didn't come anywhere near the levels that Bitcoin reached. That is, it hasn't actually reached its previous all-time high, which it set on the 20th of January. This is our previous long position. I closed it. In the end, it didn't quite reach break-even. I wasn't stopped out at break-even, although the chances were high. The low was at $102,000. My limit order was set at $101,450, and it just missed it by a bit. But this is a public limit order, and moving on, here I closed 1/3, and here 2/3. In the end, I took a small profit and exited. What does the current setup look like? Here's the trend. 1, 2, 3, 4, 5, 6, 7. These aren't Elliott waves, it's just my own extension in my trading system. Moreover, this particular candle, which has both a higher high and a lower low, is considered an exception candle in my system, so to speak. What does that mean? Even if we go down like this now, drop lower, and consolidate below this pattern, it would still be relatively safe for us to move down into this block. Here would be the ideal points for entering a long position. Right here. I've already mentioned this. I'll repeat it once more. So, basically, everything within the range of $93 to $90,000 within this range are good, excellent entry points for a long position. Not 100% guaranteed, of course, but something close to it. And what possible movements do I see here now? Well, firstly, considering that we're consolidating, trying to consolidate, above the upper boundary of the monthly R4 pivot, that is, the pivot corridor, either we stay right here at the current levels and go on to set a new all-time high, meaning we break through $110,000. What happens next? I have no idea. I don't know. This is where the free flight zone begins, where basically we could head up here, that is, to the upper boundary of this white ascending channel. And that's roughly 117. Or if it takes a bit longer, maybe 118, with a spike, $1,000, up there. That's the most favorable scenario, right here. The second option. We start trading within this zone. So, some kind of drop is expected, just like it happened here. A drop like this, we tested these lows. These lows. Did some trading, and then followed the same structure, heading to those same 117, 118, and first to cover the previous ATH. At the moment, I have two main scenarios. And the most difficult scenario, but still possible. The third one is a drop into this zone, to the lower boundary and a retest of this range. Here, it's definitely a long. So, there are three scenarios. Usually, I give two, but this time there are three, and they're all long positions. Which one should I choose? Yes, we'll remove these stakes, and I've already removed the lower channels as they're no longer relevant. At the moment, I have a public pending order set at $101,450. I'll move this pending order up. I'll allow myself to raise it to somewhere around the center of the order block. Let's put it somewhere. It's hard for me to decide straight away, just like that. Let's say 103,800. Let's try it this way. Of course. Let's give it a go. All right, 103,800. Before this, I had about 1, 2, 3. So now, I'll set it according to my own system. Stop. 1, 2, 3. Yes, roughly here. About here. It was 92 there. Here you can set it to about 93, 400. Something like that. And the take profit, as I said, for now the only one, let's just put it at the same distance. 1 to 1, 10%. That's about 114,100. Just like that. In any case, the upper boundary of the channel is above this take profit. That's $116,000 to $118,000. So if we go there, we'll hit it. As the price moves, I'll most likely take profits along the way, as I usually do, Or maybe I won't. What if we fly there with one candle? On some miracle? That's not very likely either. But what's bothering me here? Two things. I'm moving my entry point up from the current level. For one simple reason. You can see the ranges I work with. You're familiar with them. They're wide. And even if everything heads this way to test this zone, I'll add to my position here, averaging my entry, and I'll move my stop to about here. If we drop below 92, I'll most likely get stopped out. That's it. I'm simply widening my range of options, because this will be a critical zone for me. Or I'll add to my position here. We'll bounce and head back up there. So, I can afford to do that. If your feet are short. I don't know what to do here. What should you do in this zone? Everything here is risky. Why? I'll explain now. So, if by any chance Bitcoin ends up here, which isn't guaranteed, wait for this entry point. It'll be a very good one, even for tight stops. And for wider stops, you can use my limit orders. Well, again, just follow my signals and set the same stops and take profits. Everything will be fine. Next, what don't I like? Firstly, I don't like the divergence, which is already visible on the daily chart, and it's actually quite pronounced. 1, 2. 2 descending peaks. And here, 1, 2. 2 rising peaks. Divergence on the daily, fading on the MACD. Although in this kind of setup, there may be an additional impulse. It's not a strong fading, so there may be an extra impulse. Then there would be a divergence on the MACD with a deeper correction. It hasn't formed yet, but on the RSI it's clearly pronounced. I don't like that. Secondly, what I also don't really like is that, since the 20s of April, we shot up like a bullet, passed through all possible moving averages, the 50, 30, 100, 200. We broke through all of them and haven't tested a single one, not even the red one, even once. The fastest one is the monthly moving average, the 30-day one in my case. We haven't touched or tested anything. That's not good. So, a retest will happen anyway. At the very least, the price always tests the red one, even during strong movements, even then. So, there was even a similar situation. We passed through all the moving averages. There was also a divergence here. We tested the red one. Just for a moment, that was a 10% correction. And only then did we shoot upwards. It was the same in the previous growth wave, roughly speaking. We went through all of them. We tested the red one. There wasn't a strong correction here for one simple reason. While the price was standing still, the moving average caught up, so there was no need for a big drop to test it. There you go. So, the red one is always tested, even in strong trends. At the moment, the red one is around the $100,000 mark. Roughly here. Well, it will come close to the lower boundary of this candle. Even if we go straight down right now. There are two things that bother me a little. Well, the third thing, if you can call it something that really bothers me, is this whole movement. Notice, this is the Binance futures, right? I'll take the most liquid one. They moved on very low volumes, extremely low volumes. So, the protection here isn't particularly strong. This situation is starting to remind me of, well, something like this. It's starting to remind me of what we had in 2021. Although there was a new high here, after all. Very small volumes. I don't like this. Here, we broke out on twice the volume. Here it is, November, Trump's victory. Everything was great. We took off with confirmation. Here, the volumes were low. You can also see here is the order block. And here is its final boundary, the one I just showed you on the daily chart. Here it is. This is the zone. This is the strong one. We mustn't go below it. Especially on the weekly chart. These are exactly those $93,000. Here it is, the red line. Let me put it in straight away. So it's clear. Up to here is the maximum possible correction. Right now. We mustn't close below the 92 mark. Otherwise, it will be a very, very big problem for the entire market. In that case, we might end up testing the green 100 moving average, but on the weekly chart. And that would be quite unpleasant. So, that's Bitcoin. Well, that's everything, right? The new entry point is 103,800, with a stop at 93,400. Again, the stop is specifically if the body closes below this zone, not just a touch, not just a fixed stop, but a trigger stop. If the body closes below 93,400, we close the position with a stop. Take profit at 114,100. That's it. I'll post this in the Telegram channel later. For now, take note and keep it in mind. If you're trading with me, you can set both of these pending orders straight away. Next up is total 3. Delta. Everything remains as it is. Here, 870 is the lower boundary. I've mentioned it. The 200 moving average runs through here. We're holding it. It seems like, for now, we're following the softer scenario. Just like that. For now, it seems we're moving this way. But again, I'll repeat, this zone is also acceptable. A drop into this zone is less likely, but still possible. $790 to $850 billion. You can type alt in it. In this zone, it's a very good entry point. Excellent by all measures. Even just for a rebound. Right in the middle, there should definitely be an average entry point. You can accumulate from the upper boundary, from below, and you can place limits on top alto everywhere. It will be good. So, Ether, right? It looks quite good. I have already given my opinion on the air for a long time, in general, on the air. By the way, here it is, Ethereum has bounced back on good volume. There was a decent amount of volume here. But nevertheless, from a technical point of view, this is resistance, and it's strong resistance. So yes, the price could still go up here, to 3,000, maybe even a bit higher. But, for now, everything is still pointing downwards. Unfortunately, for now. So, I've already given all these scenarios. Here's the block I mentioned, the retest that absolutely has to happen, between 2,200 and 2,800. In fact, we've already tested almost this entire block. But for now, on a global scale, it's looking like this. At the very least, like this. At most, roughly up to here. At most. This scenario will only be cancelled in one case. In which case? If we move above this wave of decline, here, the structure broke at the $3,000 mark. Well, roughly 3,100. Here's the first candle, the one with high volume. If we close above it, if we close here, which is above about 3,500, only then can all of this be cancelled. But until that happens, all of this is just a correction to the decline. And you can even just use Fibonacci to look at potential reversal points. You don't necessarily have to look at the blocks. Here's the first one, 2,800. That's the 50% level. The next is 3,100, 3,200. That's the 61.8. There you have it, the two main reversal points. But there's still room for one more impulse. This is Ether. So that's the situation. Overall, Bitcoin has indeed weakened throughout this entire movement. It's clearly become weaker than it was, for example, back on the 22nd of April. But for now, it's an upward trend. A fairly stable, clear upward trend. And in such trends, you need to set pending orders. You need to set by limit orders. Which is exactly what I've just done. Altcoins, total 3 still retains the potential to return to this range. $950 to $1 trillion. Where, as I've already mentioned, I'll be taking some profits from my altcoin portfolio. Well, he also voiced his thoughts on air. That's the overview. Thank you all. If you enjoyed it and want me to release these overviews more often, give it a like so I know I'm not doing this for nothing. Mozart was on the line. Have a great day and goodbye to everyone.